came today again. Today's April 9th, and there's just been like all of a sudden stocks have kind of shot up just recently, but it hadn't been super positive on mortgage interest rates, right? The Fed rates.
Oh, no, it hasn't, and I've been in this business now for 4 years, have a team down in Franklin with United Home Loans. But yeah, this is the craziest time I've seen just being in it for 4 years. Obviously, I've dealt with a lot of, started in the business and rates were great. And, they've taken a turn, for the worse in the last 4 years now. But yeah, really over the last week, like Thursday, there was an announcement of the new tariffs and mortgage rates were experienced a slight decline. We're alerting our borrowers, hey, it's looking positive. This decrease is attributed to the market uncertainty, prompting investors to move towards safer assets like treasury bonds. That affected the rate market in a good way. But ever since Friday afternoon, that initial reaction led to lower mortgage rates, but the tariffs are expected to increase the cost of imported goods, which is going to contribute to higher inflation. Historically, a 1% increase in tariff rates can raise inflation by 0.1 percent points. So as inflation rises, the Federal Reserve is going to respond by increasing rates to curb the inflationary pressures. And that's what we've seen over the last 3 days. So where that initial reaction on Thursday was positive, they've pulled all that back and we're at, a 3-week low. 3-week high in interest rates now, but 3-week low in the mortgage-backed security. I think we could see with just tariffs, if we're importing goods to build homes, we're going to see a lot higher construction costs to build those, which is going to make people less likely to go buy those new construction homes or have builders raise their prices, which in turn is going to affect how many people can afford that home. We may see a lot of that here soon.